With property prices going through the roof in Australia, are we better off purchasing now, or should we just wait for hopefully a correction and for things to calm down? I'm going to share with you exactly what my thoughts are in terms of where the market is currently, where I think it's going, and what we need to keep an eye out for. If you're interested, keep watching. Hey guys, my name's Ravi Sharma and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because we talk about cryptocurrency, real estate, and financial independence on this channel. If you're new here, definitely give me a thumbs up for the video so we can spread this content out to more people that really need it. Now in this video, the way that I want to cover off what's happening in the economy and whether it's a good time to buy or not, I want to cover off three main parts. So one is the supply and demand equation, two is the current state of the economy, and three is inflation and debt. That's how we're basically going to break down whether it's a good idea to buy now, or should we just wait, look at other asset classes and look at, just keeping our money safe and then come into the market in about 12 to 24 months. I'm going to explain to you exactly what I think. Now, before I continue, I usually focus on the micro statistics and I share that with you on this channel. But in this video, I want to talk more about a macro approach. I want to look at longer time frames rather than, hey, how do I go into property, flip my equity in the next 3 months, and then be able to repeat that process. Because I think with a market like this that we're experiencing, there's a lot of uncertainty and the risk to reward is just shaken up. So I would much rather focus on not just giving you guys the micro trends and numbers. I want to focus on what the bigger picture here is and what we're trying to do. At the end of the day, people can get caught out trying to flip things very quickly, and that's how we get into positions of great risk, which is what we're trying to avoid. Of course, needless to say, none of this is financial advice. You should definitely go and do your own research and use these videos as a prompt to start looking in the right directions. If you need help, definitely reach out. There's a link in the description below where you can book a strategy session with me for 45 minutes. We talk about your strategy, not just with real estate, but also your other asset classes, what the longer picture is in terms of your goals, and breaking them down so that we know what we need to do in order to achieve those goals. If you've been following the channel for a while, you probably have realized now that I'm not your salesy type person. I'm definitely not here to try and convince anyone to do anything. In fact, I'm here to try and educate at scale. I don't think everyone is suited for, our buyer's agency services. And at the same time, I also don't believe that some people realize what their plan is, what their strategy is, and how to actually navigate through markets like this. Now, that's why I have a course. That's why I have these videos that I bring out. That's purely because I want to share knowledge at scale. Now, I'm not going to come out here and say, hey guys, in the next 6 months, I can get you to purchase 10 properties. You're going to retire and it's going to be fantastic. I'm definitely someone who believes in balance. I am someone who, with my work, with the investments I make, I want peace of mind and lifestyle. I'm young, I'm 28, almost 29, and a lot of the people I speak to are also looking for the same thing. You really want to mitigate your risk, but at the same time, you don't want to be left sitting there not actively doing anything. You actually want to make your money work for you, create this passive income, and have more financial choice, whether that's in 5, 7, or 10 years. At the end of the day, you can move very quickly, have huge leverage and risk associated with that, or you can take baby steps and actually move in a more succinct way and optimize the whole process, because I've been there and I've done that. So I'm trying to share with you all the knowledge I actually have. The supply and demand equation, I bring this out in every single video when I talk about real estate. It's all about supply and demand. I don't care where the properties are located. I don't care what new train stations are coming about and what new apartments are around. It's supply and demand. When we look at property deals, even for our clients or even for myself, I'm going, what is the supply and demand equation? So let me explain what this is. At the moment, when we're looking at supply, we're looking at how many properties are on the market, how many properties are going to come on the market, and how many have sold. That'll really give us a good idea as to where the market's positioned from a supply perspective. Now that could be in the form of there's new apartments being developed, across the street in this property, in this zone. There could be new listings actively coming on every single week, or have they dropped down in the last 5 years or in the last 12 months? Have they been increasing? And then looking at things like, well, if that's the supply side, and we know for a fact that throughout 2020 and now 2021, we have had a lack of supply. And I'm not just talking about lack of supply of properties, I'm talking about good quality properties. What we're finding now, especially with us being in the market day in, day out, we're finding a lot of people selling their properties for unrealistic prices because they aren't desperate to sell. And I'm going to touch on this in a little bit. But essentially, we're also seeing some people try and sell their properties during a market like this where they can sneak in their really deal, which may have some structural damage, may have some pest damage, and they go, well, let's try and secure this with an investor that may not know what they're looking for. And this is where you need to really be careful when you're looking at listings online or trusting agents. There is so much out there that won't just cost you like $10,000 or $20,000. It's going to cost you hundreds of thousands of dollars. And this is something that I try and educate as much as possible. It doesn't mean you need a buyer's agent, but it means that you need to know what you're doing, because we're not talking about going down to Woolworths, picking up a few bags of chips. We're talking about you taking on debt of $200,000, $300,000, $400,000, and if you make a mistake, it's going to catch up with you for the rest of your life. So with the lack of listings, I mean, there's conversations around media as to why this is the case. Now, this is my honest thought. My opinion is that based on what I'm seeing, everything from talking to the agents on ground, but also looking at statistics and whatnot, I'm finding that a lot of people aren't selling their homes. Now, the reason for that is because we need to take a step back, macro level, and logically think about this. If the market as a whole is now all going up, people come out and continuously say it's a seller's market. But if the seller is actually selling that asset for something else, right, be it another asset, then it makes sense, right? They can go and sell that property. It makes sense because everything else is also going up. Now, if they go and say,
I just want to sell for the sake of selling,
that's a really stupid idea, because if you don't have a strategy and a plan as to what you're going to do with those funds, you're pretty much losing, because that asset, being the home or investment property, is going up at a specific rate. Now, if you take that money out, and let's say we're talking 10 years ago, we were achieving 5-6% interest rates at the bank. So people could go, I want to reduce my debt exposure, take the money out by selling the property at a high, take that money, put it into the bank, happy days. Or you might be in a position where you've got some debt, some outstanding debt that you want to pay across your principal place of residence or across some other investment property. So it does definitely make sense to sell. But if you're someone that's trying to grow their wealth and trying to accumulate more properties, you've got to think the property that you've got has gone up in value. But if you simply go, well, I'm going to sell my property at a high and nowhere else has gone up either, you're mistaken, because this property has gone up, but so have the other properties. So you're almost moving from one side across to the other. What you want to be doing is going buy low, sell high, to then actively use that and then multiply your asset base or be in a better debt consolidated position. So with people wanting to try and sell their properties to maybe upgrade their homes, what they're finding is that the properties are also going up in value. So now they're sort of thinking, well, is there much point for us to sell, because the property across the street that we really want to live in, or the one in the next suburb that is our ideal property, has actually gone up faster than what we've got. And this is where you've got to, hindsight's a beautiful thing, but at the end of the day, it's way too much risk to let go of an asset like that in the hope that you could go and pick up another property at the same value or something that's dropped by less than what your property has performed. So that's one side of it. But they also go, well, if I want to sell my property and I can get a really good price now because it's a seller's market, now I have to go and rent. And there's nothing wrong with rent. I've made plenty of videos about rent vesting and why I do it, so you should definitely go check that out. But if they go and do that, well, there's areas that have also experienced rental growth and a vacancy rate that is so tight, which means there's no properties to rent. So now we've got to really think, is there much point for this person to sell their home? And that's exactly what we're seeing. So stock levels are really low for that exact reason. Now, they are improving and they're a lot higher than where they were 2020, but the 5-year average is still a lot higher to where they are now. Traditionally, we see winter markets also calm down, so there's a lack of listings, and I think this is a major play in this supply and demand equation when we look at pricing. So when we come across to demand, we've got people that are loaded up with cash, and not only that, but their property prices have gone up, right? So they're feeling like they're wealthier. So this is the wealth effect that I mentioned. And so when they feel like they're wealthier, they go, well, how did we get this wealth? And that was by buying property, whether that's to live in or as an investment. They're going, okay, so if I bought property and I made a lot of money through it, let's just go and rinse and repeat the process again. So now they're coming in with that equity, getting access to that cheap debt, and they come across and now they're trying to buy property. So now where we would normally see possibly 2 or 3 people after the one property or 2 properties, we're now seeing 5, 6 people for the 1 or 2 properties. And we've got a lack of listings and an increase in demand with buyers. You're only looking at one scenario, and that scenario looks like a huge property boom. Now, this is what I've been saying for the last 12 months. I've got plenty of videos to showcase that, and I don't say that,
oh, look at me, I'm Ravi and I get everything right.
It's more so to showcase that what I was talking about 12 months ago is actually happening. It might be a good idea to listen to what I'm saying now, because I base this not on just my opinions. I sit there and I go, oh yeah, I'll look at the media headlines and look at what's happening, Channel 9 said this.
It's not about that.
I do this full time, right? I'm a buyer's agent and we run an agency. There's about 4 or 5 of us that work here. But what we do is we ultimately are seeing it from different angles. We are looking at properties that have sold. We are looking at properties properties currently on the market and what's about to come in, but then we're talking to clients every day, but then we're also talking to agents every day. So from a mix of where we're getting our information, we get a confluence of what we think the narrative plays out to be. Of course, for us in our team, we've got a really strong understanding of macroeconomic factors, right? And I think what we are missing in the real estate industry, I think in Australia, is a lot of people can sort of focus on, hey, that's sold and that looks like a good property, versus where are we headed in the macro perspective? And so when we talk about a property boom and people going, well, there's a bit of a risk now compared to, say, 12 months ago. Yeah, of course there was, but there's also more of a risk now than there was 10 years ago. And that's always going to be the fact of play. But what I say is that we're super early. The reason I say that is because the current state of the economy is in a place where we're starting to see that growth and confidence come back in from a business perspective, but consumer perspective too. So as money keeps flowing through the economy, we're growing, right? And we're growing on the basis that it's been over 12 months with COVID now, restrictions eased out. We're getting COVID vaccinations. All of this confidence, along with the money printing that has occurred and been available to us through cheap debt as well, is now creating this tornado, really, where there's so much economic activity that's about to come through, is why I say that we're still very early. If I look at the market as a whole for the next 3 to 5 years, I really believe that this is year one of the next 4-5 year cycle where we have such crazy amount of growth. And I'm talking 30, 40, 50, 60% sort of growth in some of these areas, that when I look at buying properties now, there's a lag effect in what banks are okay giving you as a loan versus how they can keep up with the median prices keep changing. What I mean by this is if properties get sold, say now at 320 to 330, the same sort of properties in 12 months time will start selling for 360, 370, 380. Now the reason I know that is because I've been seeing what's been selling, looking at the supply and looking at what's coming in. Now 12 months ago, the same properties were selling for 280, 290, 300, and that's sort of the stuff that we're picking up for clients. But now when we're picking up the same sort of stuff for like 20, 30K more, people come out and say, is there a risk here, right? Like, why would I be purchasing now? I could just wait. But what are you waiting for? One of the biggest questions I get asked is, hey, well, interest rates will go up eventually, then I don't want to have huge amounts of debt. Do we understand why interest rates are going up? Do we understand why property prices are going up? And this is where you need to really ask those questions. If you do not know this before purchasing a property, it means that you need to do your research properly. This isn't about getting into a property and just buying and holding for 20 years and just hoping it'll do well. There are ways to optimize this whole process. And if you really want to achieve the 1% results, you need to do the research and put in the time. But essentially, you can follow this channel. I talk about real estate every single week, and I bring out multiple videos every single week for free. Now, when it comes to the inflation and debt component, which is the final point I want to cover off, is that we are seeing huge levels of asset price inflation because now there's more money supply, right? M1 and M2 money supply. And so when we see that, and we see that the government and the RBA working together and they say,
Well, look, we're not going to increase cash rates for the next 3 years.
what does that tell you? That means, okay, yeah, banks could, change up the interest rates in the longer term, being the 3, 4, 5 year fixed rates. They should be doing that because there is no way interest rates should be 2-3% come 5 years from now, right? I mean, a lot of banks are going to lose out on a lot of money because I firmly believe that the government is now going, we need to push economic activity to huge highs, and this inflation number of CPI going 2 to 3% is a load of shit, right? It's not real because they don't consider things like land. Now, when you go and you're trying to buy a place, shelter to live in, they don't consider that. And now what's going to happen is we're going to start seeing this flow in to a lot of areas where they're really tight in terms of their vacancy rates and the rents are getting pushed up, right? It's exactly what I've been saying for the last 12 months. Now, as we start seeing that, we're seeing inflation through, property prices. Debt levels will stay the same in terms of percentages of interest rates and things. And if we do see changes, it's going to be very minute because something to understand is the last interest rate rise we had in Australia, or the last cash rate increase that we had in Australia, was 11 years ago, okay? So in order for us to get another one, we need to move in steps, okay? You can't just go, today we're gonna announce that we're going up by 1%. The whole market would just freak out, right? So how it works is they have to move up slowly. In that time, the property prices will go up, the rents will go up and the demand for these assets, really good productive assets in good quality locations, will also go up. I still think that apartments in high-rise apartment buildings are going to be the losers in the next 5 years. Now, people getting lured in with first home buyer grants, I think those are the people that are going to get wrecked the most. Anyone coming into this market with like low percentage deposits for their own home, I think there's a significant risk there. But overall, I'm super bullish on the property market, not because I'm a buyer's agent and you should use my services. We've got plenty of clients coming through already, so I don't need to convince anyone. I'm here trying to prove that there is free education out here that's quality, but also the fact is that I would like to be historically correct, so I can reference my own videos in 12 months time. But essentially what I see happening is that we're still early. We're early in the sense that the first year of a 5-year sort of cycle, after which we see some sort of a correction. I think that's in line with the 18-year property cycle that I talk about. And in line with that, it's how you go about taking on that debt, taking on this information, and what you want to do about it. Because I think there's fantastic opportunities in the market. I'm not concerned by certain movements, small types of movements, 5-10% in the next sort of 12-24 months. I'm not concerned by that. I'm more concerned with how do we get good quality assets that not only have good capital growth demand, but also rental demand, and how do we see that growing by 50 to 60% over the next 5, 6, 7 years before we do see some sort of a healthy correction? How are you going to be best positioned for that correction, but also taking advantage of what we have at play now? Because the situation is that if you go out there and take the actions, you'll make a shitload of money, but it also provides you choice, which leads to happiness. If you're someone that becomes a little bit more passive in a time where you should be aggressive, I think you might find it very difficult to get into property, buy real estate, and build property portfolios in about 5 years' time. These are my honest thoughts, guys. Again, take it with a grain of salt. It's just some guy on YouTube talking, but if you do enjoy my content, definitely subscribe to the channel below. And of course, leave me a comment if you have a discussion point you want me to cover off. I'll catch you guys in the next video. Thanks, guys.